We've raised funds from actually in an individual debt fund, but also from external investors besides our internal investor. And so we have insight on a little bit of, the different strategies of why investors like this. And if you look at real estate debt as an alternative asset, for senior debt, it's a comparison on fixed income to bonds, whether they're investment grade or single A. So we look at our single A, a senior debt loan as relative to a single A bond. And if the single A bonds are achieving 50 basis points, let's say, and I can get 150 or 175 on a commercial loan, then it's good relative value. But there's this illiquidity premium. These are loans that I can't trade on a Bloomberg. So I have to be paid something because of the illiquidity. And typically this illiquidity bucket that sits in investors' allocation is either going to go into something like this where it's a 100 basis point premium, or it's going to go into something more high risk, whether they invest in real estate, so the alternative investment is real estate, actual, or even mezzanine, where they want to hit a higher return. And a lot of the alternative investors out there really want something that's in this higher return bucket if they're going to go and allocate to alternative investments like real estate that they would usually typically want a higher premium. So as we, in the last kind of 15 to 18 months, have been playing this limbo dance where we just, how low can you go on margin? And we've been competing with the other banks. At a certain point in time, it just doesn't make good relative value sense anymore. And, we're still seeing investors coming in now, but it's hard to say, where that tipping point is. I mean, we're starting to see, I was on a panel with a German bank recently, and they were complaining that margins were getting too low, and other investors as well. So we haven't seen a rush in. I think what we saw is a lot of creation last year of senior debt funds and some mezzanine. And we haven't really seen a lot of new ones come in this year. We've just seen them probably getting more allocation. So it's got to be, the relative value has to be there. I think what Norbert had indicated is that we're seeing a lot more, I would say, working together with the banks, is that a lot of senior debt funds aren't staffing up to be teams of 20 or 30 people with 5, 10 originators out there doing the whole business. They're looking to buy the risk in, and so they're letting the banks originate and then buy the risk themselves. So as long as they're decent returns, it looks like that's the way their strategy is going for some of them. But we do both.